Hi, I'm Ryan Guina, the founder of the Military Wallet, and today I'm joined by Angie Sanders. She has 16 years in mortgage and lending operations. Angie, welcome to the show.
Thank you. Happy to be here.
Awesome. Well, today we're going to talk a little bit about the pre-approval process for VA loans, what that is, why it's important, and how you can use that. So would you like to lead us off? Let's just start with what is the mortgage pre-approval process and how does that work?
So the process itself is not as scary as it sounds. It's actually pretty easy. It starts with a conversation either with a loan officer or a loan originator, or in some cases you can start the process online and you answer some basic questions about your income, about your purchase goals, and then the pre-approval process itself actually just verifies the information that you provided. And part of that also includes checking your credit score.
Okay, so it sounds like the bank just wants to get an idea of is this somebody we can work with and we can take that risk, if you will, to let them buy this house and we can underwrite it and back their mortgage. That's the whole process of what this is.
Pretty much, yeah. So
Okay.
really starts low, stakes are super low. It doesn't cost you anything. Doesn't take all that much time either. And then once you, a lot of times can take pictures of your documents, upload them very simply. So the whole thing isn't as scary as it sounds, but it's really, really important to get it so that you're taken seriously as a potential buyer.
Okay, so I am a military member. I want to buy a house. I'm going to use the VA loan because I think that's what's best for me. When in this process should I get a pre-approval? Is this something I should wait until I'm ready to buy? Should I start 6 months out? Where in that process, like how far out should I be looking?
I would say the sooner the better, honestly, because a lot of times what happens is there might be something that pops up that you're not necessarily aware of, or that is maybe lurking on your credit, maybe as a mistake even, or an error. And so the sooner the better. So if you want to, I would even talk to people, hey, even if you're a year out, it's okay. It's not like we have to continuously pull the credit, anything like that, but really just want to get you ready, because if there is something there that we need to address, it might take time to fix something. There may be something that is a hurdle that you just don't even see at the time. So the sooner the better. And then that way we have all the time in the world. The other thing is, let's say you don't plan to buy for 6 months, but with the market and the way houses come in and out of the market pretty often, I would always say to clients that I was working with, like, I would rather you have it in your back pocket, because if you're driving around on a Saturday or Sunday and all of a sudden this home pops up that you're super excited about, fits all your, checks all your boxes, would be great for your family. If you don't have that pre-approval in hand, you could really miss out on opportunity to make an offer on that property.
Okay, so that's actually leading right into my next question. What happens if I don't have a pre-approval and I want to buy a house? Can I make an offer without a pre-approval, or like how long does it take to get this pre-approval? How does this impact me as a buyer?
Yeah, it makes a huge difference. If you go, some agents won't even write up the offer with you if you don't have the pre-approval, because you really want to be able to show the seller that you've done your due diligence and that you're a serious buyer. And without that pre-approval, there's no way to differentiate you from someone who hasn't done that due diligence. So those sellers don't know if you were actually able to purchase the home that they have for sale.
Okay, and that saves them a lot of time too as a seller, because they don't want to go down that long process of working with a buyer and finding out, hey, we've gotten so far, and it's just a lot of time to invest for them, because if they're selling their house, they're probably ready to move on because they're going to buy a new home, or they have something else in their lives that they need to take care of.
Yeah, most
Okay,
definitely. And
yeah.
then from your perspective, so as the buyer yourself, you want to be sure that you're comfortable with your monthly budget. Right. And so part of that pre-approval process will walk through that. So let's say I want to buy a home for $450,000. That sounds great. That's what I think I want to buy. Well, when we do the numbers, I might decide, oh, dang, that monthly payment maybe is a little bit out of my comfort zone, or actually I'm really comfortable there. Maybe I can stretch my budget a little bit. So part of that pre-approval for you personally is really feeling confident when you're out there looking at homes that, hey, this is the price range that I'm comfortable with budget wise. This is what's going to work for me. And it just kind of empowers you to get out there and make the best choices you can for yourself and your family.
That's great. So it's a good tool not only to let a buyer know that you are serious, or a seller rather, know that you're serious, but it also helps you as a buyer to have a better idea of what you can and cannot afford within your budget.
100%.
Perfect. Well, okay. So it sounds like this pre-approval process is something that I really need to do if I'm going to go buy a house. What is it that I need to do if I'm going to do this? What should I do before I call the lender and say, hey, I want to buy a house? which papers should I have in order, or do I need anything?
Yeah, I mean, it's handy if you have a pay stub. If you've been at the same employer for several years, maybe you do or don't need that W-2 right away. But we've made it so easy. So many processes of getting pre-approval are just super, super easy because we can do things like you can connect your bank account to the lender. So they can't access your money or anything like that, but they can see your assets. In some cases, we can verify your employment via electronic means and things like that. So, but just to kind of be basic, preparedness, I would say have an idea of what your goals are, what you want to buy, kind of what that budget looks like. Also, how much money do you make? Just kind of have an idea of what that looks like. If you want to include all of your income or just parts of your income, do you want to have someone on the loan with you? Do you want to have someone else considered? If so, you're going to want to have that information for them too. We're going to go through, a few questions about assets. We're going to talk about employment history, any major gaps. So it's kind of helpful just to in your mind kind of go back through, oh yeah, I did this, I did that, and just kind of be ready to talk about those things. That's pre-qualification. And so then we will take the heavy lifting off of you, tell you the bare minimum of stuff I'll need to get, like a pay stub, a W-2, just information of your employer. Maybe you want to connect your bank account, so you don't even have to upload bank statements. We'll take a picture of your photo ID. A lot of this can happen on your phone. It's so easy because you can just take pictures of documents. You don't have to go anywhere to fax them in old school or even upload them via, go to a Staples or something like that. So a lot of times just taking pictures on your phone makes it super easy. You can do it from your living room. You can do it from your car, all the things. I've talked to people in the past literally doing it while they're waiting for their kids to get done with practice, So super easy, and just don't, it's one of those things I would just say, don't be scared to do it. Just don't be scared to do it. The stakes are super low, but the upside is really, really high.
Okay, no, that sounds wonderful, and it sounds like it's a little less intimidating than I was
Yeah.
thinking at first. Now, I heard two different words. There's a little bit of difference between those. One was pre-approval and one was pre-qualified.
Yes.
What is the difference there, or is there a difference that borrowers need to know about?
Yeah, no, that's really good. So pre-qualified comes first, and that's just when we're talking about your situation. I'm asking you about your income. We're talking about where you've worked for the last couple of years. We're pulling the credit scores. We're asking a few other questions there. And then if everything I hear sounds good, I pull your credit and it's qualifying as well, then it's time to get pre-approved. And the difference is just the documentation that supports what you and I talked about.
Great. So it sounds like a pre-approval is the next step in the process, and that's a little further down with the lender saying, if all goes well, you should be good to go.
Yeah, you are who you say you are. You make what you said you made. So pretty simple stuff.
Awesome. Well, you mentioned that it's a good idea to take this pre-approval process, and you want to do it several months out prior to buying so that you have that time to change things if there's a problem with your credit report, or if the lender says, hey, we need to show maybe this a little bit, or maybe you can improve your score. How long is this pre-approval good for? Is it something that once I get it, it's good indefinitely, or does it last a certain amount of time? Do you have to re-up it, and what is the impact of doing that?
Yeah, no, it's a great question that I would get often. Really, it's as good as long as you want to keep it open. And what I mean by that is, if you have a good relationship with your loan officer, then it's a matter of has your financial situation changed? I literally have worked with people who kept that pre-approval open for a year or more because let's just say they weren't in a super hurry to buy or the timing wasn't right for them. The credit piece will expire after 90, 120 days, depending on, the lender that you're working with. But that's something you can pick up along the way. But otherwise, if your financial situation kind of stays the same, then it doesn't necessarily have an expiration. So, but if things change along the way as well, then you want to let your loan officer know those things so we can adjust your pre-approval accordingly. So let's say you got a raise at work, and we had you pre-approved for $350,000. And then I'm just touching base, checking in, how's the home search going, find anything that's really piquing your interest, and you're like, man, not so much, or having a really hard time, finding houses in my price range. Well, then I might ask you questions like, well, any chance you're going to get an increase in your income, or going to have a debt paid off? Looks like this balance is kind of low, so that we can kind of work together to maximize that buying power that you're trying to get. So good communication is key. And then just not thinking like, oh man, don't feel rushed, but also be ready. What that does for you is just makes you ready and confident when you're going out into the housing market to show buyers, or excuse me, sellers, that you are a confident buyer with the means to actually buy the home that they're selling.
Wonderful. This sounds good. Okay. So I know that I need this pre-approval before I can show a seller that I'm serious as a
Hmm.
buyer. And it's going to help me to get a good idea of how much I can realistically spend every month. So that should help me dial that in with my budget. And you talked a little bit about the process. That is, it's not very difficult. We can just take some pictures and send copies of maybe a few forms or show you how much we earn. How long does this process take? If I want to go shopping this weekend, is that something that I can start on a Monday and be ready to shop on the weekend, or is it something that takes a couple of weeks? What are we looking at as a potential home buyer?
Most times it's within the day. So most times, if you call your lender and you get the ball rolling, if you say, "Hey, I'm ready to go this weekend," most times we can make that happen. So we can get the basic information we need. There might be times where I'm like, "Okay, so here we are. You've got me everything you needed." The other thing that we talked about, you don't quite have a document from me on that yet, but I'm going to issue the pre-approval. Just get me that document as soon as possible, and let's get you out there shopping.
Wow, that's a lot faster than I would expect. So I imagine you're going to have to pull a credit history or a credit report. What does that look like for potential borrowers, and what should they be concerned about? And we can get a little deeper into how the credit score is built, but what are we looking at from a lender's perspective that the potential buyer needs to be aware of?
So a minimum credit score, 620. And then within the credit, we're looking for things like collections, judgments, liens, things like that might pop up, payment history. Really, what we're trying to determine is, are you credit worthy to make this mortgage payment every single month, not be late, 30 days late, and make it every single month?
Okay, so I have a good idea. If I'm approved or pre-approved for a loan, I should be able to go out and start looking for a house, and the seller's going to know that I'm a serious buyer, that I'll at least be potentially able to get that loan. What happens if I don't get pre-approved, or are there things that might prevent me from getting that pre-approval?
Definitely, yes. Yes, but I always say don't be discouraged by that, because, and that's kind of back to my original point of the sooner you go, the better. Because what my job would be is to figure out, okay, what are the hurdles that are keeping us from being able to issue the pre approval? And then, most importantly, what are the ways that we can overcome those? And sometimes it takes time, right? Sometimes maybe there is a collection on your credit and we've got to get that cleared up, and that's going to take a little bit of time. But what I can do is equip you with the knowledge to know, okay, maybe I'm not here right now, but this is what I need to go do so that I can get there in the future.
That's great. So it sounds like a good lending agency or a good lender is going to be able to work with their clients and potentially coach them a little bit or give them some advice on, hey, this is what your credit score is showing. If we can get this off through time or by paying it off or becoming current on our loans, that's going to increase our score,
100%.
showing a good history, that kind of a thing.
Yep.
Are there other things that buyers need to be aware of? Maybe they don't have a perfect credit history or something like that. Are there other things they can do that might help them get over that hurdle and then be where they're ready to be pre-approved for a home loan?
Yeah, I would say we work with veterans in general. Sometimes not just veterans, but anyone. We work with people all the time who have a thinner credit history. And so we can utilize tools like your rental history. We call them alternate trade lines. So if you have
Okay.
good rental history, you pay your rent on time, we can verify that with your landlord. If you pay your utilities on time, we can verify that with your utility company. So there's a lot of other ways that we can show an underwriter that you are credit worthy, even though the credit report itself might not have a ton of active trade lines on it, or seasoned trade lines that you've had opened for a while. So there are definitely different ways that we can help boost that. And I always would just say, I know it's a scary thing, like, because sometimes we don't even know what our credit score is at any point. But it's like, if you can just, push yourself through that uncomfortable feeling and just say, yep, I'm going to go there, you're going to be so much happier that you did, because you're going to learn about where you are right now. And if you're not quite where you want to be, you're going to get guidance on how to get there. And I mean, I've worked with people who it took them, years in some cases to get there. But oh my goodness, when they got there, it was it was like
Yeah.
so celebratory. And then when they found the house and they got under contract, like It was amazing. I mean, tears. We're talking about tears when we're we're to that point, and it's awesome. So it's doable. Like you don't have to feel that just because you don't know where you are right now, or that it kind of feels kind of scary, or that the fear of the unknown. Don't let. I would always say, don't let that hold you back. It doesn't hurt you. It doesn't cost you a dime. By the way, you can get pre-qualified and pre-approved with no skin in the game. It is just information, and it is pivotal. If you have the dream to own a home, don't let the fear of the unknown hold you back.
Well, that's good news, and it is encouraging. So it sounds like no on the pre-approval is not necessarily no forever, but it's
Yes.
a no today. Okay, so if things aren't where you need to be financially today, you still have hope in the future. Now, let's say I don't get pre-approved today, or not pre-approved at the level that I want to get pre-approved to. So maybe I'm hoping to be able to afford a larger house or something that's a little more expensive. How long should I wait? I know the answer might be it depends, but if I'm told no today, um, and I'm given some corrective actions, maybe I can work on my credit score or these other things. How long should I wait before I apply again? Is there a set time frame, or kind of what advice do you have there?
Yeah, I would say it does. It definitely depends, and I wouldn't wait. And in fact, a lot of times you don't have to necessarily close the chapter on the pre-approval and say, "Oh, well, see you later." A lot of times it's just a matter of like checking back in. So if I am your loan officer and I've said, "Hey," you need to really pay off this one debt because it just isn't, it's not in the cards. It's not going to, help you get to the home purchase price that you're looking to do. And we kind of think, okay, well, I know I have this coming up, maybe my tax refund's coming in. Then we'll just touch base and say, hey, Angie, I got that paid off. And it's like, awesome. Let's go ahead. Let's rerun. Let's update the credit to show that paid off, et cetera. And then we can kind of just keep it moving. So it's not a matter of like, hey, go do this thing on your own. I really would encourage you to stay in touch with your loan team and make sure that you're keeping them updated on how you're progressing on that plan, because it will make all the difference. And you'll feel more so like, I don't have to start over. It was always really important to me to understand what your goals are and how I can help you achieve those goals. And so that's not just a one and done, see you later, good luck. I feel like it's a relationship. And so look for someone that you feel comfortable with so that you can kind of extend that relationship. If your situation means that like, hey, you're not pre-approved right now, but you've got a few things to work on.
That's good. And I like the idea of it being a relationship so that you have something to work toward, but you have somebody who's kind of has a little vested interest in
Mhm.
helping you, and they're going to coach you along the way. And kind of having that cheerleader can be motivating, I think. Now, on the flip side, we're talking about working toward being approved. Are there situations where you get pre approval today? Maybe you didn't buy a house right away, and some time goes by. Now you're ready to go buy that house or make an offer. How much time passes before you have to look at maybe getting pre-approved again? Can you lose that pre-approval? What happens in those situations where something might change in between the time you were originally approved and when you're ready to actually make that purchase?
Definitely. I don't know if you've looked at the stock market lately or rates lately,
Sure. Yeah.
but the rates can really impact that. So if we see a big swing one way or the other, it can either boost your amount, your purchasing power, or it can limit it. So rates in general can make a big difference there. If you've had some changes in your income, that could change. Also, market prices could change. You might be pre-approved at 350, and by the time you're ready to buy, that same house is now going for much more, and it's a little out of reach. So it's a good idea just to keep checking in, when you kind of get there along the way, and that way you're locked and loaded and you're ready to go. That pre-approval is your power, is your purchasing power, and certain things can influence it. And so it's just good communication along the way.
Yeah. So you mentioned interest rates. Now, interest rates can change on a day-to-day basis, so that can influence how much you can afford, obviously.
Mhm.
And that's something that we don't control. But there are things we do control. We can control sometimes our income. And sometimes you might be like in the military, you might have a set income. But there are other things you can control, such as your credit score. Now, credit score is going to impact part of the interest rates we get as well. So, for example, if your credit score is higher, you'll probably qualify on the lower tier of whatever prevailing rates are. And if your credit score is lower, you might have to pay a slightly higher interest rate. Can we talk a little bit about the importance of credit score and some of the things that we can do as buyers to ensure that we are best prepared to buy a home?
Yeah, yeah, you bet. So you're exactly right. The higher your credit score, the lower the rate you're going to qualify for, the more options you're going to have available. And so when it comes to credit, some things to keep in mind would be to keep your balances low. We don't want you to stop using them altogether, but if you can keep them below 50% of what your credit limit is, that's going to help your credit score overall. Obviously, make the payments on time.
Yeah.
Don't be late, right? And don't miss any. So be careful. I've seen just hiccups happen like, oh man, I had that set up in an auto payment and maybe my card got compromised, my debit card got compromised, and suddenly I missed a payment, didn't even realize it. So just being very, very diligent in making sure that all of your finances are in line, you're making everything on time. Double check how those automatic payments are coming out, because I've seen that trip people up before, could be very detrimental. So you want to keep your balances low, you want to pay everything on time, and then you don't want to have a ton of new accounts opened, because hard inquiries or companies looking at your credit would indicate that you're seeking credit. And so if you're opening up a lot of new accounts, that can actually drive your score down as well. So if you're getting kind of prepared to either get pre-approved or stay pre-approved, I would say limit the number of new cards. When you're at the department store and they offer you this great rate because you can get 20% off your purchase, like, don't do that, right? If you're looking to buy a house, just avoid doing that yet. You'll think you'll appreciate that, because it could really hurt that credit score unintentionally.
And kind of segue on top of that, if you're looking at buying a new house, probably want to hold off on other major purchases. Like, don't go buy a new car, for example,
Yeah.
because now you're increasing your monthly payments, for example. You might be taking on more debt. So it might be better to wait on that new car purchase until you know what your budget's going to look like after you buy a house.
100%.
Probably sounds like on the right path. Okay, so when we talk about credit scores, you mentioned a little bit just now about how you can increase or keep things going well with your score. So, for example, not taking on new credit cards, maybe not making a new purchase or installment loan like a new car. What kind of credit score are we looking at? You mentioned earlier 620 is kind of a minimum that most lenders will set. Are there other scores that we're looking at maybe for potentially qualifying for the best rates, or other score kind of targets that we're looking at?
Sure. And it can kind of vary depending on the lender that you're working with, but I would say 740 or above is going to really put you at a position where you're going to be able to likely grab those lower interest rates and have the most options available.
They're talking about credit scores. You mentioned some borrowers, maybe somebody who's new to the military, or they're still young, maybe they're just out of college, they're looking to buy a home. They might not have a long credit history, but they do have a history of renting, or they might have other types of installment loans that they've been paying on. If you don't have a strong credit history, what are some of the things that lenders can or borrowers can do that might show that they are credit worthy and capable of buying a home?
Yeah, definitely. Well, we can look at your rental history. So if you have, rented in the same place for 12 months, that's great. A lot of times that's not the case. You maybe have moved over the last 12 months, but that's okay. We can piece it all together. So it's just really, it's helpful to know that who that rental history is with, if it's more than one over the last 12 months, and make sure that you pay them on time. And when I say on time, it's like as long as it's not a 30-day late. So as long as nothing was reported in your history with your landlord that you missed it by over a month, that will help. If you pay your utilities on time, even your cell phone on time. We've used cable bills. Well, not really cable bills, but even Netflix. I know it's a small thing, but what we're trying to do is show as many opportunities that you can show that you pay your bills on time. That's kind of what it boils down to. So anything we can do to start stacking those little wins up will help really build out a credit profile that isn't necessarily being reported in the report itself. And then from there, if we have things that are known as compensating factors, which just means what are some other things that you have in your corner. So do you have a couple of months of mortgage payments in reserves saved up. That's a compensating factor. So do you make a lot more than you need as far as your debt to income ratio, a lot more than you need a month to cover your bills? That's a good compensating factor as well. So there are other things that we can point at as your strengths to help overcome some concerns potentially that we don't have as much credit history. Because I have helped guys in the military and gals in the military purchase, I mean, in their 20s, like early 20s, they're super young. And I say, great for you, right? Like, awesome for you. This is an amazing benefit that you have at your disposal. So, like, we will find a way to make it work. And sometimes in those cases, too, it's like, hey, all I really need is this thing. Once I get you, when I have the 12-month of history on that, we're going to be golden. So, we might be 3 months away from that. But I'm like, so save up as much as you can between now and then. And you're going to be in a good spot. And then as soon as we hit that 12 months, we verify, we document, you're pre-approved, and you're ready to go.
Well, it sounds wonderful. It sounds like given that opportunity, lenders have the ability to bring a little creativity to help people get into a home and to hopefully buy their dream home or something they could afford and get into. Are there some common issues that you see, maybe among military members or anybody who's buying a home, when it comes to credit or pre-approval? And what are some of those issues, and are there ways to overcome them?
Sure. Unfortunately, a lot of what we see are collections. Collections can really slow you down because it just shows that, like, oh man, you didn't actually pay your bills on time, which is what we're looking to show that you can do. Sometimes it's just an unfortunate, sequence of events. Maybe you got deployed, or someone else was taking care of your finances. That happens with active duty members quite often. And so it's a matter of dealing with those collections. Sometimes you're reaching out to the creditors, you're renegotiating that amount, and you're getting that paid. Or maybe you're making a monthly installment plan, and then we're counting that monthly payment into your overall ratios. So collections oftentimes is something that's going to trip you up for sure.
Okay, so no easy fix there other than just making those payments, getting up to date on them, and then showing consistency over time. Is that kind of what I'm hearing?
Basically, yeah. If you can renegotiate and pay it off in one lump sum, that's great. A lot of times that's not feasible. And so what we can do is you can set up an installment plan though, and that usually works as long as we can fit that monthly payment. It's small enough to fit into your monthly budget, and it doesn't derail your overall ratios, so you can't afford the house anymore.
Well, Angie, this is great information. To summarize this, it sounds like when I want to buy a house, I'm going to go to a lender and I'm going to get pre-qualified. To do that, I'm going to give you a little bit of information, tell you how much money I make, and a little bit of other information. Then you're going to pull my credit, and we're going to verify that information, and then I'll be pre-approved. And that pre-approval will be for a certain amount. Let's say we're going to buy a house for $450,000, and that's my buying power, my purchasing power. With that, I can look at what those payments are going to be, and I can say, yeah, maybe I want to look a little lower because that's a little more than I want to spend, or maybe I feel like I might be able to spend a little more. But with that, I would have a rough idea of how much house I can afford. And now I'm equipped to go out there and make an offer on a home. And that seller is going to look at me and say, well, they're pre-approved. That means that the bank is most likely going to give them this loan. So now I can go into negotiations in good faith. And now we're talking business.
You got it.
Is this the process, and is this what we're looking for?
Exactly.
Perfect. And it doesn't take long. It doesn't cost anything to me out of pocket. And I can go get pre-approved potentially within a day, 1 or 2 business days, depending. So really, there's nothing stopping me. And if I want to do this, if I want to go out shopping for a house, I can start it 6 months early, 12 months early, and I can just kind of keep it in my hip pocket. If anything changes, we can update it. But that gives me that time to really start looking for a house and looking at that whole process several months in advance, so I'm not trying to rush anything.
That's right. And you're prepared for anything unforeseen that you don't know going into it.
Wonderful. Well, thank you so much for sharing this information with our audience and helping people get into a home. Thank you.
My pleasure. It's been awesome.